private equity, private investments, private debt. Should you add those to your 401k? Hey everybody, O'Grady here, certified financial planner. Today I'm talking about something that's popping up in the financial news and maybe even in your own retirement account. Private investments and alternatives that are making their way into 401ks. Hey, if you've heard about private equity, private credit, or even real estate funds being offered in workplace plans, you're not alone. Big names in the 401k space like Empower and Apollo, an asset management firm, are teaming up to bring these options to regular investors just like you and me. And the SEC is looking at loosening the rules to make it even easier. So what does this mean for you and me? And should you be excited, cautious, or maybe a bit of both? We're going to break it down here. Traditionally, most 401ks have stuck to the basics. Stocks, bonds, mutual funds, maybe a target date retirement fund or two. But now there's a push to add alternatives, investments that used to be reserved for the ultra wealthy or big institutions. We're talking about things like private equity, that's investing in companies that aren't on the stock market. Private credit, loans to businesses not from banks. And real estate funds that aren't traded on the stock exchange. They're being sold as a way to boost returns and diversify your portfolio, especially when the stock market is a little bumpy. So, why the big push? Well, Wall Street. Wall Street loves new products, and with more folks worried about market ups and downs, alternatives sound appealing. Plus, with people living longer, there's more pressure to find investments that can keep up with inflation and provide steady income. But, and this is the big but, these investments come with their own set of risks and quirks. So we're going to talk about what you need to watch out for. All right, Wall Street's selling it. Why are they selling it? Because they want more buyers and they can charge higher fees. Private investments often come with much higher fees than your typical index fund. Over time, those fees can eat into your returns and sometimes by a lot. And less liquidity. They're harder to sell. Unlike stocks or mutual funds, you can't just sell these investments whenever you want. Your money could be locked up for years. And man, they are more complex and less transparent. It's harder to know exactly what you own, how it's performing, or even what it's really worth at any given moment. That can make it tough to plan, especially in retirement. And of course, there's higher risk. These investments can be riskier than traditional stocks or bonds. If things go south, losses can be bigger, and it may take longer to recover. So, should you own or add these private investments to your 401k? Well, think about this. For most folks, especially if you're near or in retirement, the basics. Stocks, bonds, mutual funds, maybe a mix of ETFs, and some cash. That's still the foundation of a solid retirement plan. Private investments might make sense for a small slice of your portfolio if you really understand what you're getting into. You can afford to take some risk and don't need that money anytime soon. But ask yourself, do you really understand what's currently in your 401k? And do you really want to add something that's more complicated to it? They're not a magic bullet, and they're definitely not for everyone. All right, here are 3 steps to take before you even think about adding alternatives to your retirement plan. You got to do your due diligence. Do your homework. Make sure you understand exactly what you're investing in, how it works, what it costs, and how easy or hard it is to get your money out of it. You may want to talk to a financial planner. This is one of those times when a second opinion can really pay off. Hey, you do it with healthcare, right? You get a second opinion from another doctor. We could look at the alternatives, how they fit into your portfolio or don't really fit into your overall retirement plan. So you might want to get a second opinion. And keep alternatives as a small slice if you do decide to go with it. If you want to dip your toe into the waters there, keep a small percentage of your portfolio doing that. Don't let the sizzle of something new distract you from the tried and true basics that have gotten so many retirees to and through retirement. Come on, Wall Street's always trying to come up with something new, some new ways to get your attention and your money. But your retirement security comes first. Stick to your plan. If you've got a plan, stick to it unless something in your life changes, and then you can change your plan. And you've got to stay informed. And don't be afraid to ask questions. Ask a lot of questions. So, have you seen these new investment options in your 401k? Are you curious, or do they make you a little nervous? Hey, let me know in the comments below. I'd love to hear your thoughts, and if you'd like to dip your toe in there, or maybe you've already done that already in your 401k. In the meantime, thanks for watching, and I will see you in the next episode.